Welcome back, guys. Today I'm going to give you two strategies that can help you become a profitable trader. As you can see right here, I'm trading volatility indices. I'm trading volatility 100 as volatility 75, volatility 50, volatility 10, and also crash 1000. But I'm just going to show you two of them. Volatility 100 as will be the first one. If you want to trade volatilities, you can also go down in the video description. You can find a link going straight to Deriv, and you can register right there. You don't need to verify your information there. All you have to do is just register, deposit, and start trading right away with $10 deposit, $10 straight minimum deposit, which is absolutely great. So as you can see right here, we are on a 4-hour time frame. I'm not good of a teacher, but if you guys can just listen for at least 5 minutes, you absolutely are gonna get this strategy. So first, I'm gonna teach you how to trade a continuation pattern. So as you can see right here, this one is volatility 100s, and as you can see, it's on an uptrend. You can see this is an uptrend, so overall it's an uptrend, but it doesn't mean when you are in an uptrend we cannot sell. But I'm gonna give you how to get good entries, buys and sells at the same time. But I just wanna go for trading following the trend. So as you can see right here, we are on an uptrend, so we can start right here. So the market is like on uptrend. You can see the market is an uptrend like this, and then it changed a bit, going in a smaller downtrend here, then going back to the bigger trend again, and now the market is still on a bigger trend. So for me, because I can spot everything already, I can look for buys at this zone here. Okay, why? Because this is a support here, this is a resistance here, and resistance here, and a support here too. But this would be my buy. You know, this thing doesn't work with smart money things. The guys have cooperated smart money things, but it's not really a major thing to trade with smart money concepts here on volatilities, because it follows simple rules of support, resistance, and trend lines. This thing respect trend lines perfectly well, and support and resistance perfectly well. As long as you know how to draw this type of things, you will get it right here. So as you can see, I want us to find how could we find a buy entry right here. How do we find a buy entry right there? So as you can see, I'm on a 4-hour time frame right now. What we have to do, we have to, like, let me say the market was just approaching this zone here, and we are looking for buy. So now we have to find out what would have given us a confirmation to buy here. So I'm a scalper. All I do is buying and selling on 5 minutes or 1 minute, then I'll be out within 30 minutes. If I get a very nice entry, I can hold even up to 4 hour, 5 hour, 6 hour. But mostly I'm scalper. I enter two positions, then if I go somewhere and I know the direction is right, great, I will take out two positions and I'll leave one position running for the whole time, and I'll put my stop loss in and my take profit somewhere at a very nice zone. As you can see right here, let's go to 1 hour, which you can see that the market have approached this zone. So the market have approached this zone like this. As you can see, how would we find that this is a reason to buy right here? How would we find a reason to buy? I'm also going to give you a reason to buy right here. How did we get a buy right here? So as you can see, people who trade bigger time frames, they look for confirmation here, like engulfing candlestick. But I don't want us to do that right now. We want us to look for a smaller reversal on a smaller time frame. If you go on a 5-minute time frame, it's actually simple. As you can see right here, the market was on a downtrend on a smaller time frame. The market was on a smaller downtrend, which is just a temporal downtrend. As you can see, the downtrend I'm drawing is right here. So, and as you can see, the downtrend I'm drawing is right here. So there is another downtrend which was formed right here. Okay, so as you can see, the market is straight on a downtrend. Now we want to find the reason why we could have bought right here on our support zone. So let's go on a 5-minute time frame and look for our entry. So it's right here. Okay, you can see, so the market was just running great. The market was on this smaller pulling down. So what you're gonna mark, this lower, this is a lower, this is a lower high, and then the market form another lower here, and the market form another lower high here, and the market form a lower here. You know, as long as the market keep forming these lows, and then now we wait for the market to break above the last lower here. This is the last lower high that was formed. Now wait for the market to break above it. So as you can see, the market did break above it. We want a candle, we want candlesticks to close above it. We don't want wicks, we want candlesticks to close above this last lower high. Okay, this is the first confirmation right here that the market closed above, and then you could have waited for you have to wait for a confirmation. So the first confirmation is that the market closed up candlesticks above this lower here. After making this low, I mean the market closed above this lower high here. That means it's a change of character, which is a change of market direction. So now we are waiting to buy them. We are waiting to buy this market. So now that we want to buy, we can wait for a market to retest. As you can see, this market retest. Which zones do you want the market to retest on? I have this support right here. You can see this support right here. This is a very nice support. I would have waiting for the market to retest this zone. Let me just change the color of our. Let me just change the color of. Okay, so to look a bit clear, right? As you can see, we need to wait for the market to retrace to a zone. This zone is a support zone, so we have to wait for the market to retrace there. And this market did a great thing because it closed again above another lower high which was formed, and then the market retraced back here, and you could have ended right here, and our stop loss will be below this low here. Where would we put our take profit? My first take profit will be on a major high, which is just right. This is a major high, or this that will be the second take profit. The first take profit will be this is a high here. I will target that because I'm a scalper. This is 5 minutes. Remember this 5 minutes. I will target this high, then I will target this high. So if I can possibly get another move up to this high, I will target it, but it's too high for me. But I can target this one if maybe I have 3 entries after taking profits on this one and move my stop loss a little bit in bigger profits, so I won't lose much when the market is retracing. So okay, right now that we get our trade right there, let me just clear it and start on another fresh zone. Okay, let's go on how would we get a buy right here. As you can see, the market is buying and we are in on another account. We are in here. I got a buy just somewhere right here, so I'm gonna give you the reason. As you can see, the market is on a good downtrend. Okay, so what was the market doing? The market was forming this is a low and this is a lower high here, and the market is forming lower highs, lower low. This is a low here, lower low. This is a lower high here, and then the market formed another lower here. So and then the market formed another it could have formed another lower high, but it failed. Why did the market fail? Because it failed to close below this low here. If the market would have closed candlestick below this low, this will be a lower high. But for now, this one is actually a temporary lower high. How can we find that the market has reversed? First, the reason that we can find the market has failed. The market has failed to close below this low. And if we zoom out, we want to see that here should be a major zone. So let's look behind. As you can see, this is a zone of support and resistance. You can see this is a zone of support and resistance. It's a zone of support and resistance. This is the zone of support and resistance, and we know that if the market approaches those type of zones, the market is highly likely to reverse. So as you can see right here, the market has reversed. As you can see right here, the market has reversed. So let's just go look again. Where would we enter our buy and where would we put our stop loss? So this is 1 hour. Let's go back to 5 minutes. I like using 5 minutes for now. So as you can see, after the market have successfully closed above this high here, and you can see that above this high, the market closed with 2 candlesticks closing above, even going to retest this high here, which was really great, retesting that high here. And so where would I put my entry after the market go to this? I would put my entry right in this. This is a support here. This support here. this is resistance here. I would put my buys here, but our stop loss would be a little bit bigger because we have to put it at least just below here. At least just below here, because it's too big. So like it had to be big because we're targeting also big money. So what we want to do from there is we want the market to retrace just right in this support, and the market going bullish from there. We're also going to target our first TP, which is right at this high here, and then our second TP will be right at this high here. Those are major highs I'm highlighting. I'm not taking this from my mind. That's how the market plays. So right now you could be on your first TP, and now you'll be waiting for a second TP, and there you are never going to lose a lot of money again. So let's look for any other. So I'm going to look for anything on volatility 10 because we also took a trade here. As you can see right here, I'm on a 4-hour. The market is still on an uptrend. The market was on an uptrend like this. So you can see a very nice uptrend. So we could have been buying right here and selling somewhere. But okay, let's look where the market is right now. So because I like looking at the current data, the market is right here. Why is the market falling? If you go on one, as you can see that this market is on a 4-hour time frame. Now we want to see, because the market was making higher highs and higher lows. So this was a higher high, lower high, and the market made another like high here and a lower high, like few lower highs, and then the market made another high here. So that's great. So after the market made the high here, the market was trying to go up. So now we are waiting for the market to close candlesticks below this low here. You can see that's the low that we were waiting for the market to close below. The market start closing below that one, we're gonna look for sales because the market is breaking structure. But surprisingly, if we go on a smaller time frame, let's just go to 5-minute time frame. I wanna go to 5-minute time frame, and I will show you absolutely something that's gonna look really great for you. Okay, as you can see, let me go on a 15 first. As you can see on a 15 here, or maybe 30, because it will be a bit big. The range was a bit big, as you can see right here. So this was the last high that was formed. And that low that we wanted to be broken was right here. Okay, now we want the market to close below this low here, and then we can get a buy. We can get an entry somewhere. So as you can see right here, this is a bigger time frame, so you don't want to sell here and your stop loss will be here because it's too much big. You know what I did? I've seen that the market is forming a channel. This market is forming a channel like this. You can see it was a channel here which was looking absolutely great. That channel was looking really great, and then I realized that after making those highs, the market start again on another channel. So let me just zoom and go to 1 hour, so I'll show you clearly. Okay, the market made this nice moves here. This market likes this trend line and things. The market is more of trend line. This is Deriv synthetic indices, guys. They are trend lines, and they are more on market structure. They don't really have this mentality of smart money concept, fair value gap and stuff. No, there you fail a little bit, but they look further on those zones. As you can see now, I have been waiting for the market to go right here, because there is where we took an entry, because I know when we take an entry, our stop loss was above here, and because I was scalping this 1 hour, my take profit was just my first take profit was on this resistance here. So let's just look how I got a very nice entry right at this zone. I got a very nice entry there. So I want to go on a 5-minute time frame and just see if we can get anything useful. So as you can see right here, the market was on this uptrend. You can see the market was this small uptrend. You can see very nice uptrend, and the market here start like trying to falling, but as long as it didn't close below this low, so the market still valid to go up, and then the market was going up, making these highs, and then stop falling. And then I was like, this market is going down because now it's failing to go high. Now I want the market to go a little bit down for us to get a very nice sell. Okay, then I have seen the market moving like this on a like on a bearish channel, when the market is moving on a bearish channel, like it basically just go like that. And then I wait for a confirmation of this big candlestick here. After this candlestick was complete, I enter my buy here, my sell here, and then my TP was just above right here. That was my first TP, and my stop loss was above this trend high here. So somewhere here, this was my stop loss somewhere here, and my TP was here. So we ran straight to profit, and that was great. You could also, if you are like a swing trader, you can also end up just sell here, and your stop loss will be right here, and then you'll be targeting this lows here, because the market will obviously go there. If you look on a 4-hour, the market still looks absolutely beautiful. The market looks beautiful. So I'm not a good teacher, guys. I don't really know how to give lessons, but I'm just showing you how I trade. If you like this type of video, maybe you can just give me a like, and if I see people like my videos, I'll start learning how to teach you guys and give you good content. But these volatility indices are absolutely easy to trade, and I'm saying it unless you are not patient enough. If you are really patient enough and you have the rules, like the strategy I use, if your rules set where you can tick all the corners, all the columns, if you can tick all the columns and you enter only according to your rules, you will not lose a lot of money here. Because this volatility, actually they just go straight to how we analyze. As you can see right here, the market was an uptrend. As you can see, the market broke out with this long candlesticks, and people will be trapped right here. People will be trapped buying right here, and the market will keep going down because there is a very big resistance here and here. You can increase the zone to be bigger, but if you come on a smart time frame, you should get your entry right there. You should get a reason to enter. So let's look on volatility 75 1SE, and it seems like volatility 75 1S is going up. Let's see how, if you could have gotten a buy entry just right here. So as you can see, this is 1 hour. Now we are going to 5 minutes and see if you could have gotten an entry. Beautiful. As you can see, the market was forming a lower lows, lower highs, and then a lower low, and then the market started moving up. You can see as fast as possible. As you can see, this was a big move ever. So the market broke above our last high here. What are we looking for after that high? We are looking for a reason to buy that market. So after the market closed above, we are looking for reasons to buy that market, because this is a change of character. The market has changed the character of its, this structure was changed. Now it's an uptrend, it's no more a downtrend, because the market broke this structure. So we don't want to buy right here after the market closed. We don't want to buy here and put our stop loss here, which we have blown our account. We want to wait for the market to pull back at a certain zone. So how would I draw those measured zone? Firstly, I will look. You can see this is a perfect zone here. This is a perfect zone here, and if I could have, I would just wait for the market to pull back right here. I would have ended a very nice buy. So, but it's still risky there, because there is another zone right here. This zone is also a support right here. It's also a support right here. So what does the support has to do? The market has to come back to our support down here, and the market can shoot up. So I could have gotten my first entry here. This is my first entry, but if the market keeps pulling down, I'll end another buy just right here. So, and my stop loss will just be below this, just below this, because I don't want to make my stop loss too big, because it might blow my account if my account is like $20 or anything, because but this volatility is not that much big. You can start trading with cents. This can even open a position with 2 cents. So if you didn't have a bigger lot size, you could absolutely just be on a safe side. So now where will be our TP after we end right here, or we could have ended right here? Our first TP will be on this zone here. You can see this will be our first TP. Why? Because this was the last pullback. This was the last lower high that was made. So I will definitely just put my first TP here. If I have 2 positions, then my second TP will be on this major zone here, because it's a very big zone of support, and maybe if I go back in history, I might even see great support and resistance right in that zone. And our final TP, if we have a bigger account, let's just go on our final TP probably will just be there, because you know that will be because this is downtrend. This is a downtrend, guys, and I don't want to put my TP here. It won't make any sense. I want to put my TP right at this zone, because the market can go straight to this zone and then the market will continue its downtrend, because it's always correct. The market is always correct. Going back to its downtrend will be absolutely needed, and everybody who sold here gonna be enjoying their profits. This is how I trade, simple and not that much complex, but I don't know how to teach, guys. I told you. But if you want me to teach you how to trade Forex like this on YouTube, I don't have mentorship or anything, guys. I'm gonna teach you straight on YouTube with these videos, which are not even well edited. But if you like the videos, if you like my strategy, if you like my teaching, then just let me know so I can make more contents, even trading live if it's possible. Thank you guys for watching one of my video. See you again on the next video.